Hi there, this is Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you're definitely at the right place. Please don't forget to hit the subscribe button down there. And once you're done with that, also remember to share this lesson with your friends and loved ones. Also encourage them to subscribe to our YouTube channel. It is free. You don't have to pay anything. All that we are requesting from you is that you make sure that you share this lesson with as many people as much as possible. With that out of the way, let's get into the lesson. In this morning's lesson, I'm going to be looking at what we call the accounting equation. I'll be going through some transactions and showing you how to easily do it. So I hope that when we are done with this, you'll have a much better and improved understanding of the accounting equation. Now, the paper that I'm going to use is coming from Limpopo province. They had actually written it as a common test last year, and I was going through it. I felt that, you know what, this paper is very nice. It has got some transactions that can help my learners to understand. So I'm doing this so that you can be able to know how to treat the accounting equation, because remember, most of the time, we normally use activities that are provided to us by the district, but you also need to take an extra step and look at past question papers so that you can see how it would appear in a test standard or in an exam standard. And once you are able to familiarize yourself with question papers, you will be able to spot out common transactions. You'll be able to spot out transactions that mostly appear for a particular topic. So I'm going to go through the first part of the concept with you that is given here, and you never know, maybe one day you might meet one of the concepts that are here, and at least you will know what to do. So now here, what you're expected to do on the first section of the paper, they are asking you to look at the concepts that are written on your column A and match them with the description on column B. So that's what we exactly have to do. So now here they're saying the concept is known as a double entry principle. Before you choose any of the options, you must at least have an idea of that particular concept that you're talking about. So here we know that double entry principle says that for each and every debit entry that we make in the books of the business, there has to be a corresponding credit entry. For every debit, it must be followed by a credit entry. So we need to look for something that says that. So this is the option that we have here, number D. It says that for every debit there must be a corresponding credit entry. So which means that for double entry we would have number D here. I'll just write the letters here. Next, it says that it is a business entity rule. They call it, sometimes they call it business entity, sometimes they call it entity rule, but it's the same. But what we know about this concept is that it says that personal affairs of the owner should be kept separate from the affairs of the business. So we need to look for something in relation to that. And if you look at this, the most relevant one is this. They're saying the owner pays a personal cell phone account with a business online banking app and does not record the amount as a business expense to the business. Okay, so now we need to ask ourselves, is this in relation to what we want? Okay, we can wait a bit. So I normally advise learners to say whenever you do these things, you need to make sure that you use the elimination rule. So if I was you, I'll wait a little bit on the entity rule and just look at the ones that are more relevant. Next, we have duplicate invoice. We know that we get a duplicate invoice whenever we have bought something that was bought on credit. And here they're saying that the document used to record goods sold on account. If they're saying that you bought on account, it means that you bought on credit. So this one will go, 1.3 will go with number E. So we know that E is out, so we can cancel out D and E. They are out. We know that they are out. Then we won't focus on them. We'll just focus on the remaining four descriptions. Next, we have the owner's equity. Now we know that in terms of the owner's equity, we are talking about the net worth of the business. Okay, but if you look at this, it doesn't really give you an idea to say which one will be which one. So what you can do, you can just skip this and go to the one that you'll easily get. Next we have the concept called prudence principle. Now in terms of prudence principle, we are mostly advised to keep our expenses and incomes as accurate as possible. Like mostly they use it whenever you are dealing with a transaction where you'll be writing off a debt, a bad debt. It's always there. Okay, so which means here where they're saying that a debtor who owes 1,270 was written off as a bad debt because he could not be traced. So the reason why he's written off is because if we don't include it as a bad debt, we'll overestimate our expenses, because remember, this person, we don't have a hope of getting them. So once we write them off, we are being as accurate as possible. So for number 1.1.5, it will be number A. So this one is cancelled. Now next we have we are left with about two concepts, entity and owner's equity. Now we need to ask ourselves which one is talking about the personal affairs of the owner. So remember here, entity, I said it speaks about the personal affairs of the owner. So here they're saying that the owner pays a personal cell phone account with a business online banking app and does not record the amount as an expense to the business. The owner pays a personal cell phone banking account with a business online banking app and does not record as an expense to the business. So remember, if the owner does this, he does not record this as a business expense. Why? Because it's not a business expense. Remember, he's paying for his or her personal account. So which means that he or she is keeping the affairs of his personal affairs separate from the ones of the business. So it means that F will go with 1.2. So we'd have F here. Okay, and then next, so we'll scratch this out so that we are left with only two options. Now remember, here we have source of earnings of to the business, and also where they're saying the owner takes goods for or cash for personal use. But remember, we don't have the right concept that will explain that. So in this case here, they're saying that owner's equity will either be number B or C, but we need to choose which one is the most relevant. Now remember, the owner's equity represents the owner's interest in the business. So personally, I will choose number B as the source of earnings to the business, because it will really show me how much the business has earned. Okay, so this will be number B. Remember, your incomes are recorded under owner's equity. So if I go to owner's equity, I will get the incomes, the money that was made from the incomes. Okay, so now when we transfer that in the answer book, we have D, F, E, B, A as our answers. So you need to know how to use the elimination rule so that you can make things easy for yourself. I think I've recorded this in the wrong part. Sorry, it's supposed to be here. D, F, E, B, A. And then you are done with those concepts. So always try to start by answering with what is the most simplest for you to understand, because sometimes the phrasing might be a bit complicated. Okay, now here we have the transactions that we have to record in the accounting equation. So we need to try and find a way that we can use to summarize things for ourselves. So normally when I teach learners accounting equation, I advise them to use what we call a Lego, so that it can make their work easy. So remember, A is for assets, and we know that assets increase on the debit side and they decrease on the credit side. And then we have liabilities. We know that they increase on the credit side and decrease on the debit side. And then next we have E for expenses. We know that our expenses are increasing on the debit side and decreasing on the credit side. Next we have gains. Our gains, we know that they increase on the credit side and decrease on the debit side. And then from there we have owner's equity. Owner's equity, we know that it's going to increase on the credit side. It will be increased by our incomes. It will be increased by also capital, and we know that it decreases on the debit side. It will be decreased by our expenses. When we have expenses, our owner's equity will decrease, and it will also be decreased by drawings. Okay, so now once you know this, you have the summary of everything. It will be easy for you to know exactly how are you going to record on the accounting equation. All you need to know is where is this particular element that I'm dealing with increasing and decreasing. It will make your work easy. Now the first transaction here, they're giving you an example. They say the owner took cash of 400 from the business account for personal use. So we know that once somebody takes money from the business account, we know that we'll definitely have drawings. Would have drawings, and then would also have the bank account being affected. So we need to ask ourselves which one is increasing, which one is decreasing. Now remember, in this case our drawings are increasing, so which means that they will be debited. But you must remember that in the accounting equation, drawings will reduce the owner's equity, so which means it will be a minus. Remember, I indicated this when we're doing ALEC. And the bank account, because it is an asset which will have to be credited, it will decrease our assets. So that's how you look at this. That's how you make sure that you have understood how this works. Okay, so remember, these signs will be shown in the accounting equation. So the first one here, they're saying that we have received, keyword received. Remember, whenever we receive in the bank account. So that's account number one. They're saying that we've received 1,000 from Ubank as monthly interest on fixed deposit. The second account that we have is interest on fixed deposit. Okay, now remember, I said accounting equation is based on double entry. So the bank account will have to be debited because assets increase on the debit side, and interest on fixed deposit will have to be credited because our incomes increases our owner's equity. So we are going to record this in this manner. So number one, they will normally ask you to write which account are we going to debit, which account are we going to credit. So for 2.1, we will debit the bank. Why are we debiting the bank? Because we are receiving the money in the bank. And then we will credit interest on fixed deposit. Okay, and then remember, it's a plus by 1,000. Our bank account is increasing by 1,000 because we are receiving money in the bank account. And also remember, I said your incomes increase your owner's equity, so it will also be a plus on the owner's equity by 1,000. And from there, if you check, our assets are equals to owner's equity plus liabilities, right? Remember, this must be added according to the equation. So we are done with 2.1. Let's go to 2.2. Now 2.2, they're saying we paid. Once they say paid, think about bank, that your bank is being credited, which means it is being reduced. Okay, so they're saying we paid 15,400 to equip solutions for the purchase of equipment. So meaning that we are having an additional equipment, so which means that we will debit the equipment. So you have already identified what is happening, the type of accounts that we have, and how the elements are also affected. So remember, we are buying an equipment and we are paying using cash. So account debited is going to be for 2.2, account debited is going to be equipment. So we'd have equipment here. Account credited is going to be bank. Why? Because we know that bank is reduced on the credit side and it's an asset. So those will be would have to check the amount. The amount according to here is 15,400. So this will do two things to our asset. It will be a plus minus 15,400. So write plus and then minus 15,400. They will give you 2 marks for this, because remember, our assets are increasing and decreasing at the same time, and this will not have effects on equity and also on liabilities. Okay, so only 2 accounts are affected, and all of them are assets. The bank is an asset, equipment is an asset. Equipment is increasing, and the bank account is decreasing because we are paying using it. And then next we'll go to 2.3. Now in 2.3 here, they are saying that we paid. Very important for you to note, every time when they say you have paid or when they say you have received money, you must know that bank account is one of those accounts. So here they're saying we paid 2,400, so which means that the first account is bank, and because we are paying, our bank is supposed to be decreased, and we know that bank decreases on the credit side. Okay, so we paid 2,400 to Mika Traders in settlement of the business's account. So once they say we are settling, you must think about creditors control. You are settling a scoreload, so we have creditors control here. Now we know that creditors control is decreased on the debit side. Okay, so which means it will be a minus to our liabilities. Why am I saying that? This is because we are paying, so our debts will go down as soon as we pay, but the bank account will also be decreased. Why? Because we are making a payment. Okay, so our account debited would have to be creditors control. So we'd have creditors control here, creditors control. Unfortunately, we don't have enough space here, but I hope that you get an idea of what I'm talking about. Account credited will be our bank because we are paying using the bank. Now we need to ask ourselves, how is this affected? But remember, I've shown you already here that here they're saying that it was after receiving a discount of 4,000, so meaning that the discount has already been taken into consideration, so it's a minus by 2,400. So we'll just write minus 2,400, because remember we said bank will be credited. Here it will be 0 because we are paying for a liability at that, so it will be also minus 2,400 here. And if you look at this, both sides are equal. Our assets are equals to owner's equity plus liabilities, so which means the equation will then balance. So for 2.4, let's hear what they are saying. So now in 2.4 here, for 2.4, they're saying issued a credit note of 540 to S. Makua for goods returned by her, and then the cost price is 360. Now this transaction is very tricky. It will affect almost 4 accounts. Okay, so remember, they've given you 2 prices for a reason. Sometimes they might want you to use markup calculations to get the cost price, but in this case, thank God that we were given the account. So remember, whenever a debtor brings back goods to us, we agree that we have an increase in debtors our allowance, so we'll debit our debtors allowance, and then we will credit our debtors control. So which means we are saying that owner's equity is going to be decreased because a person is bringing back goods, okay, which reduces the income that we've made. But our debtors are also decreasing because why? This person no longer owes us because they brought back goods. So let's record that first effect. So for 2.4, it will have for account. So account debited, it will be debtors allowance. Okay, debtors allowance, and then account credited will be debtors control. Debtors control. Now remember, how is this affecting our records? Our assets are going down by 5,540 because this person no longer owes us, so would have that minus 540 here. Okay, and then remember also our equity is being reduced, our revenue is being reduced because this person has brought back goods, so it will be minus 540 again. But we need to also think about this. What else is happening? How is the cost price affected? We know that we will need to reduce our cost of sales, so we are going to credit cost of sales, right? We are going to credit cost of sales, and then we are going to debit our we are going to debit our we can say trading stock, because this person will bring back the goods to us. Okay, and this is very important for us to note. Remember, the amount that they said they gave us, the cost price, which is 360,000. So I mean 360 rents. So this 360 rents will, in this case, remember, our stock is coming back, so it will be an increase to our trading stock by 360. Now remember, we said cost of sales increases on the debit side, but in this case we are saying cost of sales is being reduced, right? So if cost of sales goes down, it will mean that we are increasing our owner's equity by the same amount, 360. So which means that our cost of sales will go down, because somebody has brought back things and we have to adjust it also. Okay, I hope this makes sense. Please don't be confused by, most learners are confused when you say if expenses decrease, owner's equity will go up. But you must remember that our expenses are going down, so it will make sense for our owner's equity to then increase. Okay, next, here they're saying that we bought trading stock from Nkwana suppliers for 8,000 on credit. Every time, whenever they say we bought trading stock, which means it's a plus to your trading stock. So in other words, this is the account that will debit, because we know trading stock is an asset, but they are saying that we bought on credit, which means that our liabilities are going up. So we'd have to credit creditors control. So it will be a plus on both sides, on the liability side as well as a plus on the asset side. So account debited, it will be trading stock. So we'd have account debited as, I think it's 2.5 here. We'll have the account debited as trading stock, and then account credited will be creditors control. Okay, and then we'll need to check the amount. I think it's 8,000, so we'd have a plus of 8,000 here, and then the equity will not be affected, so it will be a plus of 8,000 in the liability. So you need to make sure that whenever you do this, you have a proper understanding of what is happening. Okay, so we are done recording 2.5. so let's check if we have 2.6. okay, but I think also here they omitted one column for 2.7, because it seems that we won't have that one column, but we'll record. I believe that maybe learners made a plan and underlined for themselves, so we'll do that as well, because 2.7 will not have space, but that's not what we should stress about. Okay, so now let's continue here. They're saying that we paid interest on the loan. As long as they say paid, bank is affected. And they're saying we paid interest on loan, which means this is our second account. This is account number 2. Now which means our expenses are going up, and we know that when expenses are going up, we are debiting. Okay, because why? Expenses increases on the debit side, so which means this will reduce our owner's equity. Our owner's equity will be reduced by this expense, interest on loan. And remember that for the bank, whenever we made a payment, would have to credit, and this means that our assets will go down. Okay, so if you check, it's a minus on both the assets and the owner's equity. And they're saying that the interest on loan, it's 15% per annum. It was for 4 months, and the amount of the loan is 75,000. So what we're going to do, we're going to say, this is the calculation actually. We're going to say 75,000 multiply by 4 divide by 12 multiply by 15 divide by 100, which will give us 3,750. So our account debited is interest on loan. So we'd have interest on loan, and then we'll credit bank because we are paying using the bank, so it will be a minus 3,750 to our assets, and also a minus 3,750 to our owner's equity. Why? Because our expenses are going up. Okay, next, they're saying that the owner T Mikateko invested. Once they say the person has invested, you must think about capital. And if I invest capital, it means that my account is increasing. So we know that capital increases on the credit side, so which means we will credit capital. And I saying that the owner T Mikateko invested 40,000 directly into the bank account. So they are telling you that the second account is bank. Okay, so which means our bank is also increasing, and we know that our bank as an asset increases on the debit side, so which means that we will debit bank and credit capital. So let's go and write that description. So 2.7, I'll write it below this because we don't have space. So account debited will be bank, and then account credited will be capital. So we'll write capital here, and then let's check how much is this person really depositing. According to this person is investing 40,000, so which means that our assets, the money that will go into the assets, will increase our assets by a positive 40,000. So we'd have that 40,000 here, and this will also increase the owner's investment in the business. So we'd have an additional 40,000 in the equity as well. And this, folks, is how you are supposed to do an accounting equation. Most of the questions will be similar to what we have touched here. Maybe sometimes they might even think about let me go through the transactions again. Sometimes you might even also, for this one, I forgot to show a discount received, because remember we got a discount, but please remember to also show it. Just that I don't have space, but I will just tell you what you are supposed to do. So remember, we need to know what was that particular discount. Okay, now remember, on this one we did not show the discount. I think the answer sheet it's incomplete, but for this one 2.3, let me see if I can go up. For 2.3, unfortunately I don't have space to show the other effects. But what you will normally do after having written this, remember you wrote this, right? The other accounts that will be affected for 2.3, remember your account debited. Again, I'll show it underneath here because I forgot to show it. And please always remember to show that. It's very important. If you forget, like me, make a plan and show it somehow. So remember, when you give someone an account for 2.3, it's just a continuation. For 2.3, the account debited will be, remember, you are reducing because you were paying someone, so it means that your debt is decreasing, right? Remember, we're paying a supplier here, we're settling an account, so which means that we would have to reduce our creditors control. So we'd have creditors control, and then we will credit discount received. So account credited will be discount received. But at the moment they did not give us the exact number for that discount. So the question is, how will you know if they didn't give you the amount? When it's like this, you can use what we call the UK method. Now the UK method says that you must check what you are given and also take into consideration what you have. So what we want is always at the top. What we want is unknown at the moment. We know that they said that the discount was 4%, I think, but we don't know exactly what is the amount for that 4%, and that's what we are looking for. So we'd say 4 divided by the percentage of what we're given. If our discount is 4%, it means that what we had actually paid is as 96% of the amount that we are owing. So we'll divide by the 96% of what is known to us, and then multiply by that 2.4. So this 4% represents the unknown. This 96% represents the known figure, which is the percentage for the 2.4 that we paid. So if we multiply by 100, it will by 2.4, it will give us 100. So which means that the discount that we received was for 100 rand. Okay, now remember, when we receive a discount, our assets are not affected, so it will be a 0 here. Remember, this is a continuation for 2.3 just underneath this 2.4. Okay, unfortunately I forgot to show it, but I hope you will remember what I'm talking about. So that discount that we have received as an income to the business, if we agree, it's an income to the business, so which means it will be a plus 100 rand, but this reduces our liability, so it means that it will be a minus to creditors control. So if you say minus plus 100 rand, it will give you 0, so it will mean that both accounts have been equally like the accounting equation now balances, because we've shown the effects. So 2.3 was affecting for account. Okay, so always remember that if once they speak about a discount, it doesn't matter whether we are receiving or paying. If they tell you that we have paid something and we received a discount, you must have 4 accounts being affected, because you must show the effect of that discount also on the equation, how it will affect the equation. So we are done with this lesson. If you have any question, you're more than welcome to leave your questions on the comment section of this video. And if you want me to have a personal lesson with you, you're more than welcome to use the details that I've provided in the description of this video. With that out of the way, thank you so much for watching. May God richly bless you. Don't forget to subscribe. Don't forget to like this video. And also don't forget to share with your friends and loved ones. Shalom. Thank you.